Hey everybody, what's going on? In today's video, we're going to cover earnings. We still have lots of earnings to come. Earnings season's in full swing here. So plenty of companies still reporting. It's a really quiet week for economic data, but we'll look at the few things that are going on there. Did non-farm payrolls break the market? And should we buy the dip? We'll take a look at that. We'll look at last week's setups and see if we made any money or not. We'll look at some new setups this week that include Mustang Bio, NVTA, Meta, and Genie Energy. By the way, make sure you smash that like button. We put a lot of work into these videos and it really helps. And if you're wondering who I am, I'm Kevin D in the Discord. I've been trading for around 25 years, full-time trader. Working through the second level of the Certified Market Technician program. If you're wondering why I do this, I work at the investor community. I basically run it, and we do these videos every single weekend to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. It's a really cool community of like-minded traders, and members get to see these videos a day early and also get to participate in live streams and live mentor sessions. So you should check it out in the link below. So here's a quick disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, let's do this. But first, let's take a look at let's take a look at our earnings coming up this week. So on Monday morning before the open, nothing terribly interesting. On Monday after the close, I think that Pinterest could be quite interesting. I know that's a fairly popular stock. Tuesday before the open, if you're into the cruise lines and travel and all of that, you'll be wanting to watch Royal Caribbean. On Tuesday after the close, Enphase, one of the solar stocks that we had used to watch quite a bit because it was a leader in the space as far as price goes anyway. It had a really nice chart. It was outperforming everything else, but is now a fallen angel. So it'd be interesting to see if they can pick themselves up now. Chipotle also after the close on Tuesday, another really popular stock. Wednesday before the open, Uber. That's a big one. CVS, another one that is potentially market moving. And Under Armour, also before the open on Wednesday. I know that Under Armour is quite popular, and it can also, there can be a lot of movement, a lot of volatility on that one after earnings. So that can be a good play. I've noticed that, take a look at the charts yourself, but I've noticed on the charts that it does tend to move in a direction for a while after earnings. But there is usually volatility on earnings day. So it could be interesting for the short-term traders. Wednesday after the close, we have Walt Disney, Affirm, and Robinhood. All of those very closely watched. Thursday before the open, I know that the uranium trade has been getting popular again over the last number of weeks. So Cameco is the biggest uranium miner in the world, and they have earnings on Thursday before the open. So that could be interesting for anybody who's been following uranium. And maybe that's a way for you to get into that play if you're so inclined. Thursday after the close, we have PayPal. That's a big one, of course. Cloudflare, going to be fairly important, especially to myself and some of the members in the Discord who own CrowdStrike. So Cloudflare, obviously a cloud stock, and similar to CrowdStrike in a way. So I think maybe give us hints of what we could look for in CrowdStrike coming up. Lyft, obviously, also a big one, but its effects will probably be muted by Uber the day before. And that's pretty much it for the week for earnings anyway. All right, let's take a look and see what we've got for economic data. As I mentioned earlier, there's not much going on this week. Monday, nothing at all. On Tuesday, Jay Powell speaks. So you've probably noticed that all the Fed heads are coming out and talking again. They have a quiet period, just like just like company executives and everything have a quiet period before earnings. Same happens with the Fed, and they I think it's a week and a half or 2 weeks before the FOMC meeting. They need to shut up. They can't make any public appearances, and they can't speak publicly. Now the quiet period is lifted, and we'll start to see them talking again. So that kicks off on Tuesday with Jay Powell speaking in a roundtable type discussion. So that could very well move markets. We should pay attention to that, and I will, in the morning briefing, I'll be letting all the Discord members know what time that's coming up. On Tuesday after the close, Tuesday or early evening, I guess, is the State of the Union address. So that can be market moving. It definitely moves things around in the after hours. If you watch the futures, the index futures, they will be moving around a lot. But he's unlikely. I think Biden is unlikely to drop any bombshells or anything like that. But you never know. It could happen. On Wednesday, no economic releases at all, but we do have a number of Fed members getting out there and running their mouths off. On Thursday, we have unemployment claims, as we always do on Thursdays, but that's it. Nothing else. We know Thursdays are usually a day for big economic data, and we've got none this week. I guess as far as economic data goes, the big one this week is the U of M, University of Michigan, consumer sentiment and also consumer inflation expectations, and that's on Friday. And that can definitely move markets, and I think definitely move markets in a week where we've really had nothing that moves markets other than some of this Fed speak. So that's it for our economic data. Let's move on from there, and we're going to go take a look at a bunch of charts. We're going to look at major indices. We're going to look at international markets. We're going to look at important commodities and sectors. We'll look at last week's plays, and we'll look for some new setups. All right, so let's dig into the charts here. Let's start here on the SPY. Actually, you know what I want to do? It's a new month. So why don't we take a look at the weeklies here and see what's going on. So you can see that obviously, we have been in a downtrend, and just in the last couple of weeks, we have broken that trend line, and we had another good weekly candle today. So short term, obviously, we're in an uptrend. We came off that 200-week moving average. You can see that we've kind of got this head and shoulders bottom here, and we are working our way away from it. Now, we will note that there's a little bit of a wick on top of this weekly candle, and that may concern us. We'll see. We'll move to the daily charts in a sec and see if that should cause us concern. All right, let's look at the Qs on a weekly. So the NASDAQ 100 is represented by the QQQ ETF, very much the same thing, and really nice to see now. I mean, that very tentatively last weekend we were talking about how this very tentative move through the downtrend line. Well, we've moved away from that downtrend line now, and we're also above the 50-week moving average. Very nice to see. And IWM, it's going to look very similar here. We've had, although, IWM was the first one of these major indices, other than the Dow, to move above that downtrend line, to break through it, and cleanly above it, and it had a really good week. Looks like it outperformed, but perhaps coming into a bit of resistance here. Really minor resistance, though. But all right, so that is our weekly charts. Let's go look at this on the daily now, because this chart is looking kind of busy. There's a lot going on here. There's a lot I want to show you. But first, I want to, you will notice, notice this movement here on Friday's candle specifically. Now we came into a resistance, gap resistance zone, right? We know that when we first come into a gap area, that acts as resistance. Usually often if we get into a gap, we can move through it quickly, and then the top of the gap would act as resistance. Well, here for the SPY, the bottom of this gap definitely acted as resistance, and then we pulled back hard the following day. We pulled back on those non-farm payroll numbers. We gapped down, as you can see, we gapped down a lot. I guess I need to draw that stupid gap in too. There's so many gaps, so many new gaps on these charts. It's just getting messy with gap here. Okay, so there's the gap, and I guess you could argue that we filled it, right? Because we had an intraday move up and then back down. So we don't have to draw this gap on the chart. We can just delete that. All right. And we should maybe look at this move intraday, because I think that what's happened intraday here is important, and is important for what's going to happen moving forward. But it's important to know that, and we'll go to our intraday chart now. Okay, so we had before the open at 8:30 a.m. For me, this is 5:30 a.m. I usually work on Eastern time zone hours, but in the morning for some reason I can't get my head past the fact that it's 5:30 a.m. for me. So at 8:30 a.m. We had the non-farm payrolls released, and the number came in really hot. We were expecting 200 and change thousand jobs added, and it added 525,000, I think the number was. Huge. Now, it almost seems too much. They're rarely that far off expectations. I wouldn't be surprised if next month, when we get the next non-farm payrolls report, that this month's non-farm payrolls is revised down. That number just seems like an outlier. It's too high, so we'll probably see a revision, and that's something that we should try and remember for next time we get our non-farm payrolls, because that will, if this was bearish, then that revision down should probably be bullish. We talked before about how we were moving away from this sort of inflationary fear and moving into, okay, if these numbers are okay but not inflationary, then that should be good for the market, right? That should, because it means we're going to have a soft landing, and maybe we won't even have a recession. This number, though, on Friday was definitely, oh my God, we need to fear inflation again. And that's what this move down was. However, there was the other reports that morning weren't so bad. We were coming off some positive earnings, price action and whatnot, and the market bounced up nicely, quite strongly actually. It took all of this back within the first 5, 10, 15, 20 minutes. It only took 20 minutes to take back this big move down on that data. Chopped around a little bit, moved up again, and got up near the the previous day's afternoon range and the previous day's close before starting to pull back again, and pulled back really hard, went and tested the pre-market lows. Thankfully, we closed off the pre-market lows a little bit. But this in here, giving all this back again, not good. Not healthy. That does not bode well for next week. All right, all that being said, okay, so now we should probably be thinking a little bit bearish, but I don't want you to be thinking too bearish, and here's why. Actually, let's go over to this chart. Let's change this because it's cleaner. Let's change this to a daily. So we have clearly been in a buy the dip market for over a month now. All right. I want you to look at some of these candles. After we had this last time we pulled back from the downtrend line and the 200-day moving average, and we pulled back hard. And then eventually we started having buy the dip. Okay, here's our first buy the dip opportunity. Although I would almost argue, if you looked intraday on this day, and maybe you should, in fact, short-term traders should go and look intraday on these days that you know, turned into buy the dip kind of days. But you can see that we had, you know, your first buy the dip opportunity was in here, and we had a couple of days of up. And then we had a down day, and you know, we had another buy the dip, really nice buy the dip opportunity here. And go look at this day on an intraday chart. Look at the price action here. Look at where the capitulation was on this day, because you see this pattern a lot. I remember this day specifically. Okay, nice buy the dip for short-term traders. All right, we were going to go on and consolidate for, you know, get in a bit of a range for a number of days, but you know, we had some intraday opportunities here. All right, where are we getting, you know, more opportunities? Well, on this day here where we actually gapped up and then pulled back hard. But you can see we had another buy the dip opportunity there because we closed higher and went higher the next day. Then the following day after that, another buy the dip. Really good buy the dip opportunity here because this is when you could swing, and you know, this worked for a few days. Even this little gap down pullback here where it came down to the 21-day moving average, another buy the dip opportunity. What about these right here? Well, on that day, this big red day here, not a buy the dip opportunity, and that would have been obvious intraday because we closed on the lows, right? But the following day, we gapped down, gave back a little bit, and started to go up again. Go look at that day and see how that capitulated. So another buy the dip opportunity. Buy the dip opportunity here when it tried to give it back. This little red candle here, maybe not so much. It wouldn't have looked that good intraday. I think you get the point here that we've had so many buy the dip opportunities, and that was absolutely a change of character than what had come before it for a number of weeks or months. Okay, so we are in, we have, you know, we've seen the buy the dip opportunity. Why isn't Friday a buy the dip opportunity? All right, let's go look. Well, you've already seen, you know, why, kind of intraday, right? And this candle here is known as a gravestone doji. Now, this is most bearish when you see it at the top of the uptrend. So if that had happened the day before, it would be quite bearish. Still pretty bearish, though, where it happened, and it is a bearish candle. That's why they call it a gravestone doji. So I think we should expect a little more pullback. Now, what have we got? We've got some pivots here. I want to actually move back over to the chart that I've marked up. You're just going to have to deal with all this markup. We'll zoom in a little bit, though, so we can look closer at the most recent price action. Okay, so here's our gravestone doji. Where do we come down to? All right, see, I want you to look at these two highs here. There's a nice pivot there at exactly 410. Well, we came down close to that. That is the first place, if we were gonna buy the dip, that's the first place we'd look for a turn intraday. And I wouldn't be surprised if tomorrow we do see, if we, you know, if we're gapping down, or if we're coming down tomorrow, I wouldn't be surprised if we do see a bit of a turn there intraday. I don't expect it to hold, though. I think we need to come down. Like, there's a lot of negativity, and I think there's going to be more negativity if we start pulling back even more. I think people are going to start freaking out, although I will say they're freaking out unduly, okay? So that's our first opportunity at 410. Our next opportunity is, and you can see that I've drawn a Fibonacci here from this low up to this high, and our first Fibonacci retracement is the 0.236, and that is here at around 408.50. That's another area we might look for a bit of a bounce. The next spot is we had a major support level here. That could be a spot for a bounce, but I think we really need to have a bit of a pullback shakeout. I think we need to freak people out a little bit, and if people start freaking out and thinking, oh, this is the end of the uptrend, oh, we're gonna go, you know, the bull is over, the bear market is coming back, I think that takes us down to the 382 retracement, and that's going to be at around 402.40. If we go down to there, we could definitely overshoot, and you know, overshoot to maybe 400, which is this level here. Okay. I don't think we come down to the 50% retracement, although 50% retracements are pretty normal. And notice how a 50% retracement takes us right down onto that downtrend line. A test of that would be perfectly normal as well. That being said, we've already had the test of that, in my opinion. We came up through it, we broke through, we were up for a couple of days, we came back and we retested it here. That's why I think the 382 is where I'm kind of drawing my line in the sand on this. I wouldn't be surprised to see it. I also wouldn't be surprised if we do find support either at 410 or at the 0.236 retracement. I'm just not going to freak out if those don't hold. So that's where I think we're at. I think that we're going to get our chance to buy the dip. I just think it's later rather than sooner. I think early dip buyers in here may be punished a little bit. Now, if you want to try and buy off of some of these levels, these are definitely good levels, and I think we're going to see intraday bounces. Go for it. There will probably be some money made intraday on these, but I think you need to be really careful about how much you hold, and you've got to be quick to take profits and definitely quick to stop out if you're proven wrong, if it starts breaking through those levels. So that's where I think we are coming up for the next week. I think that it may not be the prettiest week as follow on to that non-farm payrolls report and follow on to just the technical weakness of that candle. We're going to see much the same thing for the Qs. You can see, same kind of gravestone doji or shooting star, same sort of idea, right? It's not a very bullish candle at all. It's quite bearish, and it looks like we're going to come back and fill this gap. Notice here on the Qs how the gap fill is right at that the 0.236 retracement, exactly on that level. So that is interesting, and the support is closer too. 301 to 299.50 here. There's a really good support zone in the Qs right here. So that's another reason I think we may not need to come all the way down to this 382 retracement. Let's look at IWM. You can see here that IWM has outperformed these other indices. Let's zoom out a bit on this one. There was some resistance overhead here at around 201, and you can see that we stalled out at around 199.25 on IWM. Filled this little gap from back here. We can get rid of that. Okay, so again here, a pullback to the 236 retracement seems perfectly normal. And if we did come down to the 382 retracement, I want you to also notice, look at this strong support level here. Really strong support level down there at the 382. So that's why I'm not too concerned about coming down to the 382. Yeah, it's going to be a little painful on the way, but I really think we would bounce there, and that would be the end of any pullback. All right, so that is those indices. Let's take a look at the VIX. The VIX is not saying we're due for a major pullback. Obviously it went up quite a bit on Friday, and it stayed up. On Thursday. Actually, yeah, this is really interesting too. We had a divergence in the VIX on Thursday. It went up quite a bit on Thursday, and you can see that it actually came down on Friday. So again, it's still diverging. Let's again go back just to refresh your memory here. Go back and look what the SPY did. So on Thursday, the SPY gapped up and went up quite a bit. On Friday, the SPY came down quite a bit. Let's go back to the VIX. You can see that the VIX did the opposite. So this was, we should have been taking notice here on Thursday. There was something weird going on in the VIX, same on Friday. It's it's getting, I guess, returning kind of normal in a way. So this is something we got to keep a close eye on at the beginning of the week. See if we have divergences in this. For instance, if if the market does go up on Monday, and again, I'm not really expecting it to. Is the VIX going down while the market is going up? Perhaps that would tell us that, if the market was going up and VIX was going up as well, that could say that little move in the market maybe its days are numbered, and that we will roll over and go and test some of those levels I was talking about. Let's look at the 10-year yield, because this is sort of showing us that maybe this is another warning sign for the bulls over the short term. You can see that on Thursday we bounced right off of that 200-day moving average and moved up a lot on Friday. Got into there's a little bit of resistance right here. Let's draw that in. We've got a little bit of resistance right here. It looks like it's probably going to want to get through that, maybe get through the 50-day moving average. I'm more concerned with what happens when we get to the top of this range that we've drawn in here now, that we've been playing around with for a couple of months. We've also got a downtrend line overhead, so we may see yields go higher a little bit. That generally means that the market is going to go lower. The equities market would go lower on that, normally inverse here. So we'll be watching that. And we also need to look at the dollar index, and this also showed a little bit of divergence as well on Thursday, and then moving into Friday. This along with the VIX should have been a real warning sign for people on Thursday. And notice how we had this big red day on Wednesday. Came down, actually here, let me get rid of that. Came down out of this range that it had been in for what, a month? Not a month, a couple of weeks. Came down out of that range, gapped down on Thursday, and then started moving its way back up. And you know what they say about from failed moves come fast moves, and this certainly did this. This is a great example of that adage, right? Because this moved right from well below this base that had been in for weeks, and now is well above it. Now, you can see I've highlighted an area here. We've got this trend line, really important trend line, right? That trend line goes way back to June of 2021. We have a major support resistance line right there, and we have the declining 50-day moving average, as well as you can actually see the top of a Bollinger Band there as well. So, what do you think? What's going to happen when we get up into this zone? Are we just going to break right through here? Are we going to roll right over, maybe go sideways a bit? I want to know what you guys think. Let me know down in the comments. Tell me what you think is going to happen to the dollar index once it gets up into this area, because I mean it looks pretty much like a sure thing it's going to go up here, right? I mean it kind of has to go up and test this, but I want to know what you think is going to happen. Where's it going to go after this test, and what is that going to do to equities markets? Let me know down in the comments. All right, let's move on to our international markets. Got to go back to this chart here. There we go. All right, so this is ACWI. This is all stocks throughout the world, and you can see that this is in a nice upward channel after breaking this downtrend here. This is making a really nice move here. Nice upward channel. Higher high, higher low, another higher high. Little bit of resistance potentially here. We've got a little bit of a double pivot level there. I should draw that in. Right about there. This 93 level, and you can see, if we get a little more granular on this, you can see that on Thursday touched that level, which was also the top of this range, and then pulled back on Friday. No surprise, because obviously, the U.S. markets are a big piece of this ETF, because this is the global stocks ETF. All right, so ACWX is the same version of that. This is global stocks, but excluding the U.S. Now, you can see we're not making, so the global stocks basically have slowed in their upward momentum. You can see we're building a nice base here, or you could call this a bull flag. We're still in it. This is still looking fine to me, but these global stocks have got to start moving up out of here, or this is going to roll right over. And we're going to see some weakness as well when we look at EFA. This is Eurasia, Far East Australia, developed countries in the Far East. Looking okay here, right? Nice base, still in a strong, uptrend line. It's, so far this is a healthy pullback or a healthy pause in this uptrend, right? Anytime we get really extended away from this uptrend line, it's good to either pull back a little bit, move sideways, and then go up again, or just move sideways for a bit. Very healthy so far. Don't want to see this break though, because I think people could freak out and it could be a quick move down to the next level here, which is also where the 50-day moving average is. Emerging markets ETF. Now remember, this one, EEM, is the one that includes China. All right, same sort of idea here. We've got a nice uptrend. We've got extended away from it. We're pulling back to the uptrend line. Don't like that it broke through the 20-day moving average. That would have been the first place I would look for a bounce. And you can see we did have a bounce earlier in the week, but we broke through that on Friday. We're probably going to get a test of this trend line. Be interesting to see what happens. And EMXC. This is the emerging markets ETF excluding China. And you can see that this looks a little better here. We've got a bit of a support level. This support level should hold, but we're flirting with that 21-day moving average right now. So again, interesting stuff going on globally here. And finally, we'll look at FXI, which is China large cap. And you can see this is really rolling over and broke through its uptrend line. It's, I don't know, there's not, we could see some support in this area right here, but then we got a big gap here. I don't normally draw the gaps in on these kind of ETFs because gaps are pretty normal, right? Because the Chinese market opens well before, the Chinese market is even closed before the US markets open. So these charts are quite gappy, but this is a gap here I think I will draw in. Because it was quite large and I think is going to be an important gap. All right, so that's it for our global markets. I will try and move quicker from now on. I know this has taken a lot to get this far. But there was a lot going on in those U.S. market, U.S. equity charts, of the SPY and the other indices. And I thought it was important to go into good detail on that. All right. We're going to look at some commodities now. We're going to start with gold, which has completely fallen apart here. This is a huge move down. A little surprising, right? But again, it broke out of a base it had been building, went up there quite nicely. It was interesting that on Thursday, it went up, tried to break out, hit this resistance level from way back here, pulled back. And they bought it up again on Friday, big gap up, and just fell apart. And then just fell right out of the bottom, went right through this, what should have been a major support level, went right through it, right through all this space and down into the next level now. So this 1880 area, important for it to hold. I don't know. Looking at this chart, it looks like we've got more downside in this. I think the next level will be down here at this 1840 area. So I think there's more downside in gold. It's just completely fallen apart here. It's a little surprising. Do we come all the way down to 1800 before this is over? I think there's a really good chance of that. So if you've got any gold plays on, unless you're willing to take some heat, you need to just bite the bullet and take your loss in here, or just get out, I think. Unless you're willing to potentially take some heat. Now it may turn, maybe it does bounce here, but the technicals are saying no. This has got more downside. GDX, the gold miners, basically confirming what we've seen in gold. However, these are coming right in a support area right now. This should be, in fact, let's turn this to major support. This is not a minor support anymore. Come on. There we go. Yeah, we would expect to see a bounce here, but if gold's falling apart, I don't think they're going to bounce. Maybe they come down to this trend line, but you can see that this still looks pretty bad here. However, technically would not be surprised to see a bounce unless gold is falling apart still. Silver, same idea with silver. We had been building this base. It had been a little messy, chopping around in that. We tried one last time to break out of there, and it fell apart, and then it continued to fall apart. And again, this silver chart, like gold, is looking like maybe there's some minor support at this level. Let's get that in. This kind of comes back to here, right? Actually, no, let's move that down. There we go. That's better. So yeah, we've got a support level here. Does it find support there? I don't know. I'm not super hopeful on that. I think that this line down here in around 2085, 86 is more likely support zone. So yeah, metal's not a happy place to be right now. Copper doing much the same thing. No support yet, but this level here in around 395 should be a pretty decent support level. That's where I would expect this decline to stop in copper. All right, let's take a look at oil next. And you can see that this is rolling over as well. We had that, and we mentioned this last week, right? We had this, what is, kind of a major resistance zone overhead. That it rolled over a bit isn't a surprise. That the decline is accelerating is a bit surprising. And I think it's even more surprising when we look at some of the ETFs within this space. So our next level of support, we've got a pivot here at around 72.50, and we have another pivot here. What's that one? Just above $70. So these are areas where we can try and look for some support, but yeah, the speed of this decline is a little frightening. We must remember, though, that I think the last word out of refilling the SPR, Strategic Petroleum Reserve, was that they were going to start filling it at around 70. So this is an area that, fundamentally we should expect to see support. If hints come out that they are going to be starting to refill, or if news comes out that they are refilling, then we will definitely find support here. All right, so that's kind of interesting there. We'll look at natural gas really quick. That continues its decline, but I don't know. I mean, in the last couple of days, the momentum has slowed a little bit. We've seen that before. We've seen a little bit of slowing momentum here and there, but it just continues to the downside. I mean, this is completely falling apart, this one. Where do we... Right there maybe is where we... Oh, look at that. We are right on an area where we should expect some support, and that goes way back to here, back in 2019. Let's get that line on there. And you can see how that, we've had a lot of price interaction with that level, and we're interacting with it again. We should probably get another line in right off of this little pivot here. That's an okay line. Let's get that one in. Is it that one? Sorry, no, this. Yeah, I'm lost. No, I think this one. This is our next one after that. Yeah, okay. All right. So if this doesn't hold, then we should expect a move down to 220 on natural gas. Man, there's a lot going on in these charts over the last little bit, eh? Now, okay, remember crude. I'm just going to blast back here really quick. Take a look at this price action on crude. Okay, moving down, yes, but look how much it moved down on Friday. Look how weak this was on Friday. All right, now we go look at XLE. This is our energy sector ETF. This is how we this is how we look at the energy sector. What's really weird here is its big down day was Thursday, and it only moved a little bit on Friday. What the heck? You know, and look on Thursday, right? It came down into this pivot level, all right? You know, really minor support, but we have had some price interaction there, and bounced a little bit off of there, and it kind of held up. You know, but it did. This is not the prettiest candle or anything, but it's diverged from what oil was doing in here, which is kind of interesting to me. Now, this could completely fall apart on Monday, you know, and catch down to oil. But if that happens, if that's the case, we've got to look here at this. What are we looking at? About 83 as a support area. This should have decent support. All right, let's look at XOP. This is the oil producers. Oil producers and explorers. You can see that has rolled over, and very similar price action to XLE on Friday, not matching what oil was doing on Friday. I should also point out actually that XLE was the second, even though all sectors were down, all of the major sectors were down on Friday. XLE was the second best performing sector, second only to financials. Really strange on a day that oil dropped so much and natural gas was down as well. I don't know what to make of that, and I guess we'll find out on Monday. So what have we looked at here? OIH, this is oil services. Not looking that bad, right? And again, diverging from oil a little bit. You know, the big pullback on Thursday, and then a gravestone doji here on Friday, but again, stayed within this base. So I'm not ready to give up on oil services yet, but you know, it's getting close. The whole energy complex is definitely in trouble here. So we've got to be really careful there. Let's look at TAN. TAN, you know, choppy as usual. Can't get through this major resistance. You know, went up there again and has pulled back fairly hard from it. But maybe finding support in this cluster of moving averages and where it's, you know, found some support before. All right, let's move on to some of the other sectors. XLY, discretionary. All right. So is the uptrend in this over? How much is it pulling back? Should we buy the dip here? Well, go back and watch what that long tirade about SPY and buying the dip in that and what's happening in SPY, because I think we're going to see very similar price action here. I think we see more downside out of this, and definitely though, first place I'm looking for support is this 148.50 area right here. It really should bounce there. If it cuts through that quickly, that would be a little frightening. That would mean that the market is probably falling apart a little bit. Next area of support would be down here and then down over here. XLRE Industrials. We can see that this tried to break out to new highs and has pulled back a little bit. But you know, the pullback here is not looking terrible or anything. This does not look panicked in this pullback, right? I wouldn't be surprised. And you know, remember, industrials, this is where our value area is. I wouldn't be surprised if this starts to outperform again over the next few days if the rest of the market is pulling back. Because if the rest of the market is pulling back, I think it happens in tech and communications and those kind of areas. Financials. Again, not looking too bad here, right? Taking a little bit of a sideways break maybe. And again, an area maybe that outperforms over the next week or so. Technology. So obviously this was very volatile this week because of our large cap tech earnings. Okay, so we had the big gap up on Meta's earnings, you know, and then we had the bit of a move down here with, you know, even though Amazon is in consumer discretionary, I think it is. You know, Amazon is I think thought of as a tech stock, but not doing too bad. A little bit of a pullback to support. Again, I wouldn't be surprised if we've got to move lower and test some of these lower levels. This gap, though, that we had, that can now go away, and you can see we had a gap here. That's almost filled. I guess we should probably draw this in. Remember I said there were like tons of gaps left on the charts here. Okay, communications sector. So this is the one that Meta is in, and look at the gap there, huge. And it's pulled back a little bit, but yeah, you know, you gotta wonder, is this gap gonna get filled? If the market starts pulling back, I think this, you know, communications sector starts pulling back too and starts thinking about filling this gap. And that puts us into, we're going to look at one of our ideas coming up. I'm going to usually do Meta right here, but I'm going to skip over that and do that a little later in the video when we look at our setups. But I will move on to Apple. And what a beautiful move in Apple. Had the gap up with Meta here. I guess I got to draw that gap in too. Pulled back a tiny little bit to support from the past and bounced really strongly on Friday. And it had gapped, I think overnight when it had its earnings, it had moved down a little bit, but then recovered really quickly, if I remember correctly. And nice to see that happen right on the 200-day moving average too. So this is a beautiful move, and especially considering how the rest of the market did on Friday, this is great. You know, maybe Apple saves the market. I know we talked about Apple saving the market, you know, up in here, right, when it was diverging from the market. Maybe we're going to see some more divergence from the market. But it did go into resistance and pull back, and that's never a good thing. So, but yeah, I think that watch Apple. If the market is rolling over on Monday, if we're getting a little pullback that you know I was talking about, watch Apple and see how it does compared to the rest of the market. And that will tell you sort of the health of the overall market, I think, on a pullback. So that definitely worth watching. Amazon may very well be the cause of the pullback in the market, and may have been the cause of the pullback in the market on Friday. Look at this, right? So this gapped up with Meta, but then gapped down a ton on its own earnings. Huge move down here. I mean, look at the size of this gap. Oops, I got that gap drawn incorrectly. There we go. Yeah, because this gap down to here, opened here, and then moved down. Or sorry, it opened and then, you know, with the rest of the market moved up and then fell apart and moved down and closed lower. But it found some support right at that 9-day moving average. So maybe, you know, keep an eye on that 9-day moving average. But if we break for below that, I think we're coming down and testing the 21-day moving average. Maybe testing the top of this former bull flag. So yeah, I don't think we've got a good couple of days ahead for Amazon. I think we're going to see more pullback in here. I don't know how far this comes back. You know, maybe we should look at a fib on here as well, like we did with the overall markets, and see if that gives us any hints. Okay, yeah, interesting. Okay, so we are almost down at the 382 retracement. You know, so that's the first place we're going to look for support, 101.50. I think we're coming for sure down to the 50% retracement, and we've got the 21-day moving average right there. So this looks like a very logical place for a bounce. Do not want to see it come down to the 618 retracement. Although if you look at that 618, that was the bottom of a bit of a range here. So that's interesting. That would be another area where we look for support. But you know, getting a little ahead of myself. You know, I'm not expecting it to come down this far at all. I think the 50%, that makes sense, and a good place for it to bounce. All right, Netflix. Netflix seems to be weathering this storm fairly well, but it did pull back on Friday. But this looks fine to me. You know, it's got a nice strong uptrend. It has maybe gotten a little bit extended here, but it doesn't look ready to pull back really hard yet, though. Let's move on from Netflix into Google. Again, Google, huge gap up on Meta. You know, with all these gaps in here now, look at them all. So here, you've got that gap there. Okay, then you got a gap down to there, to that old gap, right? And now what? So I mean, this is just gap city in this thing. Don't like how much that pulled back on Friday, but at least it closed green, right? It closed above its open. Yeah, I don't know what to make of Google. I think we pull back more, and the first place to look for support would be right at the $100 level. Let me get a little line on there. That level right there is the first place you'd want to look for support in Google. Okay. What do we got? Microsoft. Yeah, I don't like the look of these two candles here. You know, nice gap up, looks great. Pulls back and just gives it all up, right? And we've got a gap here now. So again, expecting this to roll over, come test some support levels. Tesla this week got up to very near the $200. I think this was, what was the high here? 199 even was the high. Oops. Yes, yeah, 199 even was the high on Friday, and then pulled back from there. And we've got the two little wiki candles here, right? On pullbacks. I wouldn't be surprised if we start to see a little bit of rollover in Tesla. And especially if if the market starts rolling over, Tesla's going to roll over. If Tesla gapped down on Monday, that could take the market down with a little bit. But I think it needs to either rest, go sideways in here, or roll over a little bit. Next place you'd look for support is probably down here at around 168-ish if it's having a hard pullback. All right, semiconductors. Okay, so in the semis here, we've seen this little nice move up, and it's sort of like go up for a couple of days, have a nice big up move, pull back for a couple of days, break out, go up. Well, this time it only did it for a day, pull back a little bit, break out of that, go up for a couple of days, pull back for a couple of days. So we're drawing another one of these lines here, kind of like a bull flag, but there's never really enough time in them for a decent bull flag. But I think that in the semiconductors we will this time get a decent bull flag. It's going to look something like this. And you know what? I would kind of like to see this go on for a number of days, like maybe all week long. That would get it kind of like down to here. So below that, sort of former resistance level that it's failed from now, right? And give us if we made a nice tight clean flag in here, I would totally play the breakout on that. And I think that could be a really big move, one of the bigger breakouts that this is capable of doing. But I don't think it's ready yet. I'm not ready to be jumping. If this broke out of here tomorrow, I don't want it. I wouldn't touch it. Healthcare not looking great here. A little soft in here, testing this level a little too many times, right? I mean, it broke down through that level and went right back up, but it couldn't do anything after it did. So I wouldn't be surprised to see a little bit of a breakdown here from healthcare. XBI, the biotechs, on the other hand, I kind of like this price action. We had a little bit of a breakout. Did take the pause with everything else on Friday. I think this needs to go sideways a little more. I don't think it's quite ready. It would be awesome if this went sideways on top of this. It gave us a base on base. You know how much I like that. You know what that would look like, right? We'll draw that. So look at here's our base, something like this. And then our base on base would look something like that. And then the breakout of that over here, maybe go sideways for a week. And then we break out of that. That would be very playable in my opinion. REITs, I don't think there's anything going on there. Not very exciting. Staples, you know what? These have been underperforming. We're totally fine with that. We're totally fine with these defensive sectors underperforming. So we're not going to worry about that. And utilities. Again, underperforming, broke out the bottom of this base. Have kind of made another base here, right? A base under base. We'll draw that in. And look at, broke out of that base, broke down out of that base on Friday and through a former uptrend line and bounced right back. So I think we could expect some more sideways action in utilities, maybe even a bit of a turn up. Remember, these are defensive. If the overall market and those riskier stocks in the market are pulling back, like we think they're going to, we may see outperformance in sectors like utilities, which is why I'm showing you one of those later in our setups. Actually, that's coming up any second now. All right, quickly, our setups from last week. AMAT broke out nicely, starting to pull back, maybe drawing a little bull flag here. But if you were in this, I hope you've taken some profit, or some or all. It's pulled back quite a bit here on Friday. Maybe it, has another down day, comes and tests this breakout area in here. Or maybe we just start, setting up a nice tight little bull flag. That would be the better situation, that it sets up a nice tight little bull flag here. Something that looks like that. Here, move that up to there. I want that to look tighter. Cool. Whoops. Sorry. All right, there's our potential bull flag in AMAT. But like I said, hopefully you took some profits up in this area here. But this may give us another opportunity to get in. And if you did take some profits up in that area, but still want to hang on, that you think this, you like the look of this uptrend, and remember, it is in an up, or an intermediate term uptrend here. This would give you an opportunity to get back in, breaking out of the bull flag, assuming that it forms. I'm getting way ahead of myself, Colin. It's only 2 days long, right? Or really only 1 day long. On the flag portion of this, we like to see these, at least 3 to 5, 7 days in there. All right, Carnival Cruise Lines, it also did really well. Had a nice breakout here. It would have been a little scary taking that late in the day in there, and then it gapped up the following day. But again, this is going to draw a little bull flag in here, just like much the same thing I showed you with AMAT. Same sort of deal there. DraftKings, it broke out of the range that it was in. It's finally moved out of this pattern of failing at the 200-day moving average, failing at that downtrend line, gotten above it, and moving away from all of that. So we can expect DraftKings to move higher, maybe not right away. Again, it's had this big pullback, and it had a doji here, indecisive, on Thursday, and then tried to move up and failed on Friday, but stronger than a lot of stuff that a lot of Friday's charts that we're looking at. I think some sideways action in here would be good, and then break out of there, and that breakout out of there could be really good. So I think this is something we need to keep an eye on. But I would love it if this took a week in here, right there, and then broke. Then I'm going to play that for sure. So I'll keep this on the list. But we're not ready to do anything with this right now. If you're in it, awesome. I would be staying in it and looking for, basically what I told you, right? Any, move down out of Friday's low, though, it gets a little sketchy. MRVL. And again, same sort of thing here, right? We were looking at, potential breakout above. We were looking for this to flag, I think, last week, and I was looking for because we were looking at this really early in this, thinking, okay, maybe if this flags, this gives us something to play. I didn't play this, but if you did, maybe draw a line down across those highs and then played that, played this little gap here early in this day, you did really well. But now, and again, hopefully you took profit, because like a lot of these other setups that we had looked at, they're in a little bit of a pullback mode, and maybe drawing a flag, but too early to know. All right, let's move on to new setups. Now, we talked about MBIO. We've talked about this, I think, for maybe 2 weeks now. as a very risky, it's a little penny stock, biotech, very risky play, but potentially huge, fast move, right? I mean, it would not be unreasonable to say that this could double over the course of a couple of days. Not a lot of short interest though, so that not going to have that on its side. But you can see that when we were looking at that prior to this week, we had this little sort of upward sloping bull flag, and then it broke out the bottom of that on, was that Monday? I guess that would have been Monday. But then it's gone pretty much sideways from then. So I think we need to turn this into a more traditional looking flag perhaps. Something like this. Let's move this up to here. Yeah, I like the way that looks. A little messy with that. It's got this this other trend. You know what? I'm just going to get rid of that trend line because that's kind of irrelevant for playing the flag. Okay. So here you go. I mean, you guys know what to do, right? You just pick your spot, either above this little downtrend line here to get in. Do you get in above those two highs? Yeah, I mean that that could be a good play. Do you get in above that high? Sure, that'd be another way to do it. And then you work out where you want your stop to be. If you're willing to take a bunch of risk on in this, then then your stop goes below these two lows right here. And you know what? I mean, I say a bunch of risk. It's not that much considering this is a penny stock. What is that? You put your stop at maybe 63, 62, something like that. And if you're playing this breakout here, I mean, that's only 70 cents, right? You're going in at 71, 72 cents in there. That's not too bad considering it's a penny stock. So, yeah, I like this one. I'll be watching this one all week. Another one that's very similar to this is NVTA, another smaller cap biotech. This one has pretty decent short interest. 41 million shares short on a float of 238. So what is that? Around 17%, I suspect. Double check my math on that. But you can see this is sort of like basing in here. But look at all these wicks. It just can't get up. There's a seller. There's no doubt a seller, probably a short seller, at 293. Every time it goes up there, they sell it hard. 1, 2, 3, 4 times. If that ever gets through 293, I think this thing is going to blast off. You got to be quick on buying that, and I kind of wonder if you just got to buy at well, you got to watch it. You got to watch it intraday and watch it on the tape and see what the price action is like intraday when it comes up to 293. And if it looks like it's going to go through, then maybe you buy 293 and you put a stop at 292 or something. Really depends on what the intraday price action looks like. But you should be able to play this with a super tight stop. Once this goes, it should really go. So. Yeah, I think that this could be fun. You don't want to go in here and then have your stop way down here at 240 or something like that. You don't need to do that. You're watching this intraday price action. If it doesn't go right away, you're out. Okay, here's a short. And you're like, what? Okay, so I mean, all this talk about, the market's, pulling back over the next few days. Well, what is a great way to play that? The stock that gapped up the most. The one that's given a gap in all these charts we've looked at, right? We've looked at this big gap, and it was all because of Meta. Now, people are really happy with what they heard. From the earnings release in Meta, and they are doing a $40 billion buyback. So that is working against you. This is definitely a bit of a contrarian trade here. There's no doubt about that. But it being a contrarian trade, it going against the current market sentiment is one of the things that could make this trade very lucrative. All right, we can define our risk really well on this trade. Now, there's a couple of ways to do it. That should say alt entry. Whoops. Here we go. Okay. the first entry on this, and I think the one that is most likely, is that tomorrow morning this either gaps down or opens and starts to roll over and goes down. Because I'm expecting the markets to go down. If the markets are going down, well, Meta is probably coming down with it. And it starts filling that gap. So somewhere around 182.49 or so, or just below Friday's low, that's an entry on the short side. Maybe you want to wait until just below Thursday's low. I don't think that's necessary. And then you could look intraday for a stop, because this is a wide range here. You don't want to have your stop way up here above 196, right? That's too much, I think. You can look intraday, maybe go above these bodies, like halfway up in here would be an okay place for a stop. Or look intraday on the day, intraday chart. We can do that right now. Like here, above here would definitely be, that would be kind of a wide stop in my opinion. I think above here, what's that? What is the 191-ish? That could be, 191 and a half, say. That could be a half decent stop too. And then you can sort of tighten things up, make the position a little bigger. If you're up in here, you got to make the position smaller. If you're going above the high of Thursday, then the position obviously has to be even smaller. But I don't think you have to go here. I think here you're wrong. Okay, so that's where we're going to be wrong. Where are we going to be right? Well, obviously, if we're right, this should drop fairly quickly. I think this moves down very quickly down into the 170 level. So that gives us, if we're in there at around 182, down to 170, that's $12. And $12, it probably happens in a day. Because I think people are going to freak out when it fails and it drops. Certainly when it drops Friday's close, other people are going to start getting in here short. And when it drops Thursday's low, that's when people are going to start freaking out. They're going to be looking at the chart going, well, where's the next level? Oh, geez, the next level is in a 170. Okay, I got to get out of this thing. And so, quick move down to 170. Does it continue all the way down to close the gap? Maybe. But I'm going to be taking some profit off at 170 for sure. And, I'm going to want to hang on to a piece unless it starts to bounce really strong off at 170. So that's the first entry setup in Meta. Now, another entry, I think, if we don't get the pullback in the market that I'm expecting and we start moving up, we'll look at how we've got these two highs here and how it pulled back so hard from these highs, right? These wicks and that little double high here. That's why I want to get short in this thing. We come up there again. Now, I wouldn't short. I wouldn't just put an order to sell at 196.01. But what I will do is put an alert there, and I want to start watching the price action. I mean, actually put the alert a little lower than that, so that I am watching the price action as it comes into 196 and see if those sellers are still there. And if they are, and it starts to roll over, well, I'm going to get on the backside of that. I'm going to be fairly quick to get in on the short side, and then I will put a stop just above that level. Maybe 196.5 or something. Because if it starts to roll over from here, it should roll over fairly quickly. So I think this should be a fairly easy trade in Meta. And I think could be a really nice trade. I'm really looking forward to playing this one. And then finally, one that's it's not ready yet by any stretch of the imagination. I'm going to be watching it this week. Now, this is in the utilities. Remember, we said that the utilities could outperform this week if the market is pulling back. This just broke out from, you can see the level here. It's really clear, right? That 11 level broke out nicely and has now got a couple of days of pullback in here. I want to see a couple more days inside this tight flag. If this goes on Monday morning, I don't want it. I want to see more pullback in this because this should pull back. I mean, look how long it's been in this base here under this level, right? It should pull back and test. So, a couple of ways to go in there. It comes down to 11. Now, ideally, this comes down to here, right? So this takes all week. Comes down to here, and it comes to 11, and it starts to bounce away. That would be a nice early entry. And in fact, you could even put an order at 11 with a stop at 1085 even. Just have a little resting order there, and just for a small piece, a really small little starter position. Why not have an order at 11 or 1101 with a stop though on that, say 1184. That could get you started early. And then let's say it does start moving up from there. Well, as soon as you get down through this downtrend line, assuming that it still looks the same when it does this, then you add more above there, and then maybe you add more above here. So you could start thinking about maybe you get to do 3 entries on this, because if this starts to go, I think that it could make a nice move. Now there's a level here that we've got to watch out for. This level, though, goes back to, was it 2019, July of 2019. That's really the next level of resistance here, once we break out above that, right? So that's at about 12 bucks. Beyond that, though, you've got to go back forever, and our next, levels of resistance are up in the $14 area. So I think this could, this could be one of those trades that turns into a nice, long, lazy, it's not going to move fast, but it's a nice, long, lazy uptrend that you can just sort of get in and ride for a while, potentially. All right? And fundamentals in this one are good too. But that, this will do well if the market gets more defensive for a little while. That is the last of our, the stocks we've got to look at today. Wow, what a day. There was so much to go over today. I'm kind of pooped after this session. All right, so thanks for watching, everybody. We'll be doing this again on Sunday. We will also, for Discord members, on Wednesday, we have a ticker talk session. We'll be looking at tickers that the members want to take a look at, plays that they're looking at. So again, if you want to join us live for those sessions, they're a lot of fun. Take a look at the link below. Come join the Discord. We'd love to have you there. And the more the merrier. And we have lots of fun in all of these live streams. So thanks for watching this far. Go ahead, hit that like button, share, subscribe. And if you've made it all the way to the end here, you guys are rock stars. Thanks for coming out.